Hey, this is JD Frost. Welcome to the Daily Ledger Podcast, and I am pumped up today. Pumped up for this Daily Ledger Podcast. So, I've got this speech coming up, and I'm going to just rip it off right now because I'm getting ready to go talk to some real estate agents in Orlando, Florida, coming up in March. And I'm looking forward to talking with them because the one thing that I see that real estate agents really need help with is what we cover in our tax planning and how in our tax planning system and how we're able to help people. So I started my accounting firm in 2012, partnered with Paul Croft in 2019, at the very end of 2019. And what has been amazing is at the beginning of 2018, I went to this conference called 10X, and I got exposed to all these different people, all these different entrepreneurs, and they all had the same issue. They had no idea what it was like to do tax planning. They had no idea what tax deductions that they could take on their tax return. Always confused, never got any good information from a CPA, and never had any great communication with a CPA, and lacked ideas on how to save money on taxes. So, listening to this podcast, hopefully you're going to get some information on how to reduce your tax liability as well as just overall tax planning advice. In tax planning, we want to accomplish three things. We're going to accomplish not paying any unnecessary penalties and interest. We're going to calculate what's called the safe harbor calculation. The second thing we're going to accomplish is we're going to reduce your tax liability as much as possible. The third thing we're going to accomplish is we're going to predict what that tax liability is going to be so that you don't have any surprises whatsoever. Who likes surprises? Nobody likes surprises. I don't like surprises as a business owner, and I also don't like overpaying. I want to have some value in what I am in doing, and that is the second step, is reducing your tax liability as much as possible. So real estate agents typically have a 1099 income. Almost every single one has a 1099 income. So they have the opportunity to write off many different things as a part of their expenses. Now, what do you write off? What don't you write off? The best way to determine what you can write off and not is to write down every single thing that you spend money on and talk to your CPA whether or not that is a personal expense or a business expense. That's the best way to do it. And the best way to accomplish that is to have a bookkeeper. So go hire a bookkeeper. Everybody, hire a bookkeeper right now if you don't have one, because if there is no awareness around where you're spending money, then there will be impossible to make a good choice about whether or not you can write it off or not. You have to raise awareness for your finances in order to be able to make better choices. And the better choices that you make, the better results you're going to get. Like, this relates to every single part of our lives. That's what I love about taxes, is every single year that you look at a tax return, every single year you look at a tax return, you're able to see a picture. It's like a little keyhole into people's lives. And when you're able to walk through that door, when you're able to not only look through the keyhole, but actually the taxpayer allows you to open the door and come into their house, their financial house, and they are not embarrassed the fact that they have a closet that's completely full of all kinds of crap. You know, you got that place in your house that's that catch-all where like everything is, that you never want to open the door. That's what people feel like. I don't know if you've ever felt like that way before, but that's what I have seen with clients. They're embarrassed. They feel like they should know better. And why should you know better? You don't know. I don't know every single thing. I have to ask people for help all the time. But in order for us to help you with tax planning, in order for us to help real estate agents in particular, we got to have the real estate agent that's willing to open the door so that we can come in. Once we're able to come in, then we're able to have more awareness around where you're spending your money, where are you not spending your money, where are you putting your money, where are you wasting money, where are you deciding to maybe spend money on that cruise. I know some of you like some cruises. Cruises and casinos. I'm telling you, real estate agents love those places. Get a big commission, go on a vacation. Totally get it. How in the world are we able to maximize those deductions, it's through bookkeeping. So, number one tip to real estate agents, go hire a bookkeeper. Number two tip for real estate agents, create a separate bank account for your business that's different from your personal account. Now, every single month, you need to figure out the amount of money that you need to make to live. That is different than the amount of money that you make. The amount of money that you need to live, and you need to move that money from your business account to your personal account every single month, preferably every 2 weeks. Third thing you need to do is every single time you get paid, take 25% of that and put it into a tax account. That's your third bank account that you're going to form. So you're going to have a business account, you're going to have a personal account, and you're going to have a tax account. Now, another thing that real estate agents need to be doing, besides hiring a bookkeeper, besides creating these three accounts, is you need a fourth account that is going to be your investment account. This is anywhere from 15 to 20% of what you make, and that's going to be depending a lot on what your goals are. 15 to 20% of what you make on every single check you get is going to go into that account. So now you're saving to invest. So you've got your business account, you've got your personal account, that is the money that you live off of every single month. You got your tax account, you got your save to invest account. And then your fifth account is going to be the party account. The party account, you want to take 10% of what you make every single paycheck and put it into that party account. That party account, you can do whatever you want to with it. You want to start taking control of your finances. You want to start to save money on taxes. Bring awareness to where your money is going. More awareness is going to allow you to make better choices. Better choices are going to get you better results. Those are the 5 bank accounts that you need to create as a real estate agent. That, in combination with bookkeeping, is going to solve 80% of your problems next year when you do your taxes. P.S. If you hire Croft & Frost as your accountant and you have all that done, I bet you will save 20 to 30% on your taxes this year. Thanks for tuning into the Daily Ledger Podcast. Really appreciate it. You want to learn more or get the book, The Life Ledger, go to www.thelifeledgerbook.com.